Hello, and welcome back to Consumer Times. Today, we're diving into a topic that many of you have requested about Forex trading in India or foreign exchange trading, which has gained immense popularity worldwide as individuals seek opportunities to invest in global currencies. However, in India, Forex trading is regulated by strict guidelines to protect investors and ensure market stability. Recently, the Reserve Bank of India, RBI, published a list of unauthorized forex trading platforms, alerting citizens to avoid these unregulated avenues. Let's delve into what forex trading is, the regulations around it in India, and why it's crucial for investors to be cautious about unregulated platforms. Forex trading involves buying one currency while simultaneously selling another, creating what's known as a currency pair. This can include major currencies like USD, AUR, and JPY or exotic pairs involving emerging market currencies. The aim is to profit from the fluctuations in exchange rates between these currencies. While many countries allow unrestricted forex trading for individual investors, in India, forex trading has limitations imposed by the RBI to protect retail investors from high risks and ensure economic stability. The forex market is heavily regulated in India, primarily to prevent excessive capital flow out of the country, which could destabilize the rupee's value. Forex trading is only permitted through recognized exchanges such as the National Stock Exchange (NSE) and the Bombay Stock Exchange (BSE) for currency pairs involving the Indian rupee (INR). Additionally, the RBI restricts Indian residents from trading in forex markets with currency pairs that do not include the INR, a practice known as overseas forex trading. The Foreign Exchange Management Act (FAMA) governs forex trading in India, setting out strict rules for Indian residents and companies engaged in forex trading. Any breach of FAMA guidelines can lead to severe penalties, including fines and imprisonment, underscoring the government's strong stance on unauthorized forex trading. Despite stringent regulations, several unauthorized platforms have emerged, luring investors with the promise of high returns through overseas forex trading. These platforms often advertise on social media and the internet, targeting inexperienced investors unaware of the legal implications of trading on such platforms. Many of these platforms operate without regulatory oversight, leaving investors vulnerable to fraud, high fees, or even losing their entire investments. Unauthorized forex platforms typically encourage trading on currency pairs that do not involve INR, which is illegal for Indian residents. They may also offer leverage, or borrowed funds, to entice traders to invest more than they can afford. While high leverage can amplify profits, it also significantly increases the risk of substantial losses, often leaving traders with large debts. The RBI recently issued an official list of unauthorized forex trading platforms, cautioning the public against engaging in transactions through these unregulated entities. By identifying these platforms, the RBI aims to protect Indian investors from potential fraud and financial losses. The list includes several well-known international trading platforms that operate outside the purview of Indian regulatory authorities. This move by the RBI is a part of a larger initiative to clamp down on unauthorized financial activities and safeguard the interests of Indian investors. The RBI has clarified that any individual or entity engaging in forex trading on these platforms is doing so at their own risk and may face legal consequences. The central bank has also directed Indian banks and financial institutions not to facilitate transactions related to these platforms. Forex trading on unauthorized platforms poses several risks for investors. Unauthorized platforms operate without any regulatory oversight, meaning that investors have no protection if they encounter fraud or unfair practices. Regulated platforms in India must adhere to strict rules that ensure transparency, safety, and fair treatment of investors. Many unauthorized platforms have been known to disappear overnight, leaving investors with significant financial losses. In the absence of regulation, these platforms are not obligated to reimburse clients if they shut down. Trading on unauthorized platforms is illegal for Indian residents and may result in legal penalties. The RBI has made it clear that forex trading must be conducted only through regulated exchanges in India, and individuals using unauthorized platforms are at risk of violating FEMA regulations. Unauthorized platforms may charge exorbitant fees and hidden charges, reducing investors' returns. They often exploit loopholes to impose fees that are not disclosed upfront, making trading even riskier and costlier for retail investors. Forex markets can be highly volatile, especially for currency pairs not involving the Indian rupee. Unauthorized platforms may encourage traders to invest in highly volatile currencies with promises of high returns, but these trades often result in substantial losses for investors who are not prepared for the market's unpredictability. To avoid the risks associated with unauthorized forex trading platforms, Indian investors should focus on trading only through recognized exchanges that offer INR-based currency pairs. Here are some tips to identify authorized forex platforms. The RBI periodically updates its guidelines on authorized forex trading practices. Staying informed about these guidelines can help investors distinguish between regulated and unregulated platforms. Authorized forex trading platforms are registered with Indian regulatory authorities, such as SEBI, Securities and Exchange Board of India. Ensure that the platform you are trading on has the necessary registration and regulatory approvals. Indian residents are permitted to trade only in currency pairs that involve the Indian rupee, for example USD, INR, EUR, INR, through authorized exchanges. Any platform offering non-INR pairs is likely unauthorized for Indian investors. In India, the two main stock exchanges, NSE and BSE, provide authorized forex trading options. Trading on these exchanges provides the security of regulatory oversight and ensures that the platform adheres to Indian laws and guidelines. The RBI has taken several measures to protect investors from the risks associated with unauthorized forex trading. By publishing a list of unauthorized platforms, the RBI is raising awareness and discouraging investors from using these platforms. Furthermore, the central bank is collaborating with other regulatory bodies, including SEBI and the Enforcement Directorate, to monitor and act against entities violating FEMA regulations. Additionally, the RBI has instructed Indian banks and payment service providers to be vigilant and avoid processing transactions related to unauthorized forex trading. This measure further limits the ability of these platforms to operate in India by cutting off their access to banking services. Forex trading can be a profitable investment avenue when conducted through authorized channels. However, the lure of high returns from unauthorized platforms has led many investors down a risky path. The RBI's publication of a list of unauthorized forex trading platforms serves as a crucial reminder for investors to exercise caution and avoid unregulated platforms. If you are interested in forex trading, consider doing so only on RBI-approved platforms that offer INR-based currency pairs. Not only does this ensure compliance with Indian laws, but it also provides a level of security that is absent from unauthorized platforms. As an investor, remember that legitimate profits come with responsible trading, thorough research, and adherence to regulatory guidelines. By staying informed and making prudent choices, you can participate in forex trading legally and securely, avoiding the pitfalls associated with unauthorized platforms. Let this RBI advisory be a guide to safe and informed trading practices that protect your investments and keep you on the right side of the law. Thanks a lot for being with us. If you enjoyed this video, don't forget to like, subscribe, and hit the notification bell to stay updated with Consumer Times.